Good morning, everyone. Thank you for joining us for Treasury Metals and First Mining's call to discuss the Goldlund acquisition. I am Mal Katavovska, Vice President of Corporate Development at First Mining. Please note that this webinar is being recorded and will include forward-looking statements. On the call today is Greg Farron, CEO of Treasury Metals, and Dan Wilton, CEO of First Mining. During this call, we will be referring to a presentation that is also available on each of our websites. After the presentation, we will be taking questions. Please submit your questions using the Q&A button at the bottom of your screen. We're excited to walk you through the merits of the transaction today. I will now pass it over to Greg Farron.
All right, thanks, Val. And good morning, everyone. Good afternoon in Europe, and certainly a pleasure to be here today. We're very excited about yesterday's announcement by signing the definitive agreement whereby Treasury Metals will be acquiring the Goldlund gold project from First Mining. This will create a leading Canadian developer with over a 3 million ounce deposit. And as many of you know, the project is located in a rich infrastructure environment directly on the Trans-Canada Highway with a recently completed EA to allow a proposed mill and tailings facility at the Goliath project. Rarely in the mining sector do you see a transaction where you see such significant synergies, and that's going to be the focus of my discussion today. The other thing I'm excited about is the timing of the transaction. As you know, these things do take time, but it's the timing with the gold price, the fact that the EA is completed, it'll now allow us an opportunity to look at how we can enhance, optimize, and integrate these projects before you move to that important next stage of development. Sorry, my phone's ringing here. Obviously with a much larger production profile. The third thing, when these things take time, it allowed us to develop a good relationship with the management team at First Mining. And also from that amount of time, we both have a very good understanding of both projects will aid in the development as we move forward. And then finally, personally, as many of you know, I've been talking about consolidating the camp, not necessarily Goldlund, but other projects. So it's great that today we're able to discuss bringing together of these two largest, most advanced projects to create this new gold district. So with that, it's my pleasure to turn it over to Dan Wilton for an introduction.
Yeah, thanks, Greg. And I share your enthusiasm and excitement for what we're putting together here. You know, at one point as we were going through this, Greg made the very apropos comment to me that, you know what, sometimes the smartest deal you can do is like the one that's right next door. And so often in the mining industry, we are accused of, looking on the other side of the fence and always criticizing the other guy's project because, it's they always think that what we have is better. But this is I think a really good example of when putting together a logical combination like this is really going to help us all collectively drive value for all of our shareholders. So yeah, and as Greg said, these things don't happen quickly. But I think we've got to a very logical place here that we'll walk you through, and certainly us and our shareholders are very excited to be moving forward with Treasury.
Okay, great. So I'll get started with the presentation. Just on the forward-looking statements, we're not going to be getting into too many forward-looking statements in terms of the development of the project, but just to note that the transaction is required as subject to shareholder approval, which is expected to be completed in early August. So consolidating a gold district in Northwestern Ontario. So there's 5 big takeaways for me. The first one on the resource side and exploration potential. By bringing the two projects together, it's more than 3 million ounces, as I've mentioned, with a significant shift towards potential open pit production. And then the exploration potential. This transaction consolidates 2 projects and creates over a 300 square kilometer land package, over a 65 kilometer strike length, and there's several high priority exploration targets. On the Goliath project, as you know, there's the exciting C-zone discovery we've had this summer. We've identified a lot of interesting potential along strike and at depth through some of the early stage exploration work we've done. As you move further up the Greenstone Belt, the Goldlund project, we believe there's significant potential along strike, longer term at depth as well. And then 10 kilometers further along strike, you've got the exciting Miller discovery. The second thing is the ability to fast track the projects into production. Now, I'm not talking about from a permitting feasibility standpoint. Obviously, a lot of detailed and hard work lies ahead. But by bringing these projects together, you're creating this scale that's going to allow to attract the institutional capital and the talent required to operate and develop these projects. And that's another reason why this transaction is so important. The third thing are the synergies. There's a slide a little further ahead that I will get into this in more detail, but the synergies are significant. To give you an example, for the Goliath share, for the Treasury shareholders, we're moving to a significant potential amount of open pit production, which will allow for reduced capital and de-risking our underground. And then for the First Mining shareholders, later in the presentation, you'll see a map of the combined projects. At the bottom of that property package lies the Goliath project directly on the Trans-Canada Highway. So we have the infrastructure and that permit to build the tailings mill and facility. So by being so close together, there's that potential to share infrastructure and the mill. And then finally, capital markets. Obviously, there's a huge potential over the next 6 to 12 months to increase the market cap, liquidity, and institutional ownership and research. And finally, there's a lot of value left in the transaction. The combined companies trading around now $30 an ounce. Our peers of similar quality projects are trading around $80 an ounce, and the transaction is quite accretive. We're not going to get into the NAV of the combined projects, but I can assure you that we're trading at a very attractive multiple when you compare the potential NAV of the two projects with our peers. So the structure. So Treasury is acquiring the Tamaka sub that owns the Goldlund project. We'll be issuing 130 million shares to First Mining. That's about a 43% ownership. There'll be 35 million listed common share warrants that'll trade on the Toronto Stock Exchange and the QX. There's a strike price of 50 cents for 36 months. And then there's some longer term upside for their shareholders through a royalty, 1.5% NSR. We have the ability to buy back 0.5% of that for 5 million Canadian. And then there's 2.2.5 million cash payments as the Goldlund project meets certain production milestones. In terms of governance, there'll be a board of 7, 3 from First Mining, 1 direct employee of First Mining, and 2 independent directors, and then 4 from Treasury. We're going to be forming a technical committee we're quite excited about because there's a lot of good talent on both teams that have a good understanding of the projects. So there'll be 2 members from Treasury and 2 from First Mining. First Mining will, after 6 months, but not later than 12 months, will distribute the common shares and warrants to their shareholders. They will retain up to a 19.9% interest, although they have the ability to distribute more if needed. And the reason we decided to wait that 6 to 12 month period is there's going to be an integration period in terms of marketing, integrating the teams, building out the executive teams, and getting some important news to the market in terms of a combined economic study, and then the distribution will occur. So Dan, why don't you just jump in and talk a bit about the transaction from your perspective?
Yeah, sure. And Greg, I think you kind of have highlighted a bunch of the important points here, including, for us, it's First Mining is becoming a significant shareholder of Treasury, and still a real ongoing role where, both in governance and in technically helping to scope and move the project forward. We need to make sure that we're harnessing all of the knowledge of these 2 deposits as we move them forward. And then again, the distribution from our standpoint, we've announced we're going to intend to distribute 70 million shares and 35 million warrants out to our shareholders. And the timing of that, as you said, sort of 6 to 12 months. So it's something that we'll continue working on here, and we think have a lot of opportunity to add value on the project in advance of that happening.
Okay, great. Okay, and then the regional consolidation, and I'd like to hear, Dan, your perspective as we integrating the larger Goldlund property, just to hear your perspective on the region.
Yeah, well, listen, one of the things that we talk about with this region, we think right now this is a project with 2 million ounces of indicated resource, another 1 million ounces of inferred. and we've always talked about Goldlund alone as having solid 5 million ounce potential. I think this is a district in Canada that no one's ever heard of, right? And it's amazing that we can get this far with Treasury, with a federal EA approval for a mine and mill and a 3 million ounce resource within 25 kilometers of that mill, and no one's ever really heard of it. But this area is, I think, I've been First Mining now, almost 18 months. I've had a lot of interaction with the communities, with the regulators. I think this area of Northwestern Ontario is the best place in Canada to develop a project, maybe the best place in the world to develop a project. I mean, the town of Dryden, a hardworking town, resource development focused, lots of skilled trades, and the infrastructure in this project, you cannot overemphasize. You've got the Trans-Canada Highway, you've got lots of power, you've got rail, you've got, the Trans-Canada mainline gas pipeline goes down the bottom of the project. So it does not get any better than this. And in terms of opportunity for continued resource growth at these projects, we've barely scratched the surface at Goldlund, and Treasury has some really exciting, very clear sort of on-strike resource development around Goliath. So we're very excited that we're really only at the beginning of looking at this as a combined area here.
Okay, excellent. And just for everyone's attention, that image in the bottom left side there, you can see the two projects. So there's about a 2 kilometer distance between the projects, and you can see the Highway 72, that direct access down, and then there's the potential ability to transport through the right side of our project. And for everyone's attention, these two projects, these two PowerPoints are available on both of our websites, so please feel free to download those. So the next slide is on the synergies, and this is a very interesting slide. So there's obviously 5 big areas for synergies: the resource, processing, lower risk, permitting, and shared G&A. So just in the interest of time, I'll just sort of touch on 1 or 2 points for each one. On the resource, I talked about that shift towards open pit production and that significant strike length, and we believe the ability to extend mine life and increase our production profile. From a processing standpoint, we will have the infrastructure through that permit on Goliath, and then you're in very close proximity for trucking or other means of getting that ore to the Goliath site. In terms of lower risk, lower costs, some good examples there would be obviously with larger open pit production, you're going to have lower operating costs. The initial capital cost, as most of you know, at Goliath, to build the mill and tailings facility, coming in around 140 million from the pre-feas work we're doing, is very low. And when you want to scale up to a larger mill from say 2,500 to 4,000 or 5,000 tons, that additional incremental cost is not that significant. And the other thing that I guess is no longer relevant, but a key part of why the transaction occurred, is if you move the two projects together on a standalone basis, Goliath and Goldlund, to a construction decision, it was probably about 60-70 million of capital to do that. But combining the projects, roughly 40-50 million in cost savings there. And permitting, I won't say too much about that, but we've had success at Goliath with that. We've got, both companies have strong regional relationships with First Nations, and that'll continue. And we share the very same regional contacts and relationships. And then G&A, there's a lot of potential in terms of G&A savings and combining some of the talent to continue to advance the projects through the technical committee. And then the Atlantic Gold Model. So Dan, do you mind walking us through this interesting case study?
Yeah, no, thanks, Greg. And this, I've shamelessly promoted this a few times to our shareholders, just looking in the context of Goldlund. Atlantic Gold obviously was a great success story, but it was really built on essentially a regional deposit that has a lot of similarities to what we have at Goldlund and Goliath, a series of deposits. They were a couple of million ounces along, a 75 to 100 kilometer trend. We've got 3 million ounces at, quite substantially higher grade, all within 35 kilometers of where we would build a mill. The infrastructure, similarly, these are projects where people are going to be able to drive home at night into, real towns and communities. So there is real benefit from that perspective. But this hub and spoke model where you're able to get the project up into production, and ultimately then you're spending some time, but you're using cash flow to help delineate a bunch of the longer term exploration success and opportunities. I think that's a really helpful model. And obviously that was recognized by the market, was recognized by ultimately a strategic party who wanted to have that as a core asset. But I think what we're looking at here is a very interesting analog to that. And one of the things that, we've talked about it with our shareholders quite a bit. When you look at the open pit potential between Goldlund and Goliath, both of these would combine to be two of the highest grade open pits pretty much anywhere, right? Of real development projects. It's rare in this industry to find, open pit grades that are, higher than 1.5 grams. And so I think that really speaks to what we think the economics are going to look like when we finish off some of the optimization work to be able to tell the market about, on a combined basis, what we think these projects are going to look like.
Okay, good. And just a couple quick comments, Dan. I think we're in a much stronger gold market than when Atlantic Gold team was developing their project. So I'm going to hold the management team and board to it that I think we can do better.
I love it.
And the other thing that struck me from the Atlantic Gold success is it was flawless execution just from looking in. But I think that this project, the scale we now have, and the time in the jurisdiction in Ontario, I think we'll be able to attract talent that can execute similar to what Atlantic Gold did and the shareholder value they created.
Yeah, I think that's
okay.
Right.
Corporate snapshot here. So just a quick overview of the transaction. Again, 170 million shares currently issued on Treasury Metals today. We're going to issue 130 million shares to First Mining. As mentioned, they're going to retain that for a 6 to 12 month period, and they will hold up to 20%. As you can see, we're going to have this first time we'll have a nice cornerstone investor like First Mining, and then we'll be issuing 35 million warrants, which will be listed for trading. And then there'll be a 3-to-1 consolidation, rounding out at a perfect 100 million shares. Wow, I don't know.
Doesn't get any easier than that, does it?
So roughly just over 100 million market cap. We're currently covered by Haywood and PI, so we thank them for their support. And then just the other thing that what's quite striking is there's even synergies in our shareholder base. As many of you may know, we've got a long-term and supportive shareholder base. Probably half of our registers in Europe. And Dan and his team have done a great job building out their shareholder base in the US, which we don't have. And I think as the transaction is approved in August, and it's marketed and developed, you're going to see a much stronger institutional following will naturally happen, as well as we're hoping that a much stronger Canadian shareholder base will develop because of the project obviously being based in Canada. So Dan, any comments there?
Yeah, no, I think the main comment that I'd make, Greg, is that one of the real rationales and benefits that we see to the distribution to the First Mining shareholders is ultimately, those shareholders helping broaden out the Treasury shareholder base. We have great share trading liquidity in First Mining. Our shareholders a lot of them wake up to trade every day. And we're really blessed with this group of shareholders. So we're excited that a bunch of our shareholders are going to become direct shareholders of Treasury, but we think that's going to have a positive impact in the daily share trading liquidity as well.
Yeah. Okay, good. All right. And Dan, I'd like to hear your perspective from the sort of valuation potential of the combined asset.
Yeah, and as Greg said at the outset, there's still a lot of work that we need to do to ultimately be able to deliver to the market a sense of what we think the net asset value is here. But on a very high level, when you look at the realm of North American developers, which we have on the page here, Goldlund Goliath with this resource endowment is trading at a third of the value of its peers based on, per ounce potential. And I think when you look at what we believe we're going to be able to scope as a low upfront capital, very high return project, and the sort of the ease of execution, this relative simplicity of the project development, we would think that this project should be trading, at the average or a premium to the average from there. So I think this just speaks to us that, this is a really important strategic asset that we think deserves to have the value recognized in it. And we can see, a solid 3x return in a reversion to the mean and upward from there. So we're excited about that.
Yeah, and it's always nice to bring a news story to the market as well. So, okay, and then just in terms of the benefits, we've touched on a few of these. So, some of the benefits for Treasury shareholders: increased scale, development synergies, exploration upside, that importance of that larger open pit, and then liquidity for the capital markets. And what's interesting to me when I look at those benefits, I have a very difficult time trying to rank them, which I think really shows of the upside and the potential value creation that's going to happen for our shareholders. But I will touch just quickly on a couple of them. Obviously, that increased scale, both from a resource perspective and then the market perspective as well. Development synergies are significant in terms of that close proximity that will allow for synergies, cost savings. I touched on the exploration potential. We're quite excited to get back drilling. There will be a program this year. We have to quite figure out where that focus will be, but there's lots of potential at Goliath. I'd like to get back drilling that C zone. We think that has the real potential to increase the underground production beyond that main zone production. And then, of course, at Goldlund, they've had some success recently expanding along strike at Goldlund, and then earlier this year at Miller. Open pit, we talked a fair bit about that. And then again, just that increased liquidity, visibility, and peer positioning is very important. And obviously having that advantage of being a Canadian jurisdiction is going to really assist there. Over to you, Dan.
Yeah, and then I think from the First Mining side, obviously, a meaningful ongoing ownership, and I think a real opportunity for our shareholders to benefit from the surfacing of value as this project develops. I think the acceleration that this can bring to the integrated development is very important, just due to the great work that Greg and his team have done in moving forward and securing that federal environmental approval already. I think it's tough to quantify how important that is to the integrated project delivery, and Greg and his team are absolutely to be credited for that. We talk a lot about the portfolio in First Mining Gold, and it's always been a challenge for us to really demonstrate, what we think the value of Goldlund is. We don't think it's been reflected in our share price, but this is going to bring some transparency to that, at least. It's tough to say it's worth zero when, we're going to have 130 million Treasury shares trading at values heading north from here. So I think that is some real benefit, I think, for us, just in the visibility of that value. But importantly for us, this combining of this project, we're going to have a lot of involvement, and I think we're going to be involved because we think there is an enormous amount of upside from here in articulating and moving the projects forward on development. But importantly for First Mining, this now becomes self-funding, because to do real justice to this is going to take quite a bit of capital, and we do have our hands full with the other best development opportunity in Northwestern Ontario, being Springpole. So, very different projects, obviously. But we're in the middle of a PFS and an environmental impact statement process, and Greg knows all too well how all-consuming those processes can be. So I think this really does give us a chance to focus, particularly our capital, on moving Springpole forward. So we're very excited about that, and I think that goes for us all to see that there's, there's significant benefits on both sides. You look at this page, and this to me says, there was real room to do a deal where everyone's going to win, and I think we've done that.
Now I'm just going to walk us through the proposed timeline and some of the integrations just from a high level. So starting today with the consolidation, the first phase, and the reason why we don't have sort of specific timelines is obviously we want to wait for the transaction to close, and the first phase is really going to set the key steps moving forward. There's 4 areas that we're going to work on in that first phase of roughly about the 6-month time frame. There's some mine scheduling work, and we'd like to get out that combined economic study. Treasury's been working quite hard on its pre-fees, so that'll be done to about a pre-fees level, and then the Goldlund will be down to a PEA level. So I'm not too sure the exact nature of that 43101 document, but it will be a very good quality document. Most importantly, that'll allow Treasury to then begin its provincial permitting. We've had that on hold for the most part, assuming that this transaction could happen, because you need to know the size of your power requirements, for example, for the mill, the size of the mill once the project is integrated, and understood what the proposed combined production could be. And then there's a lot of metallurgy work that we need to get done in the beginning. And then there's a bit of a gap analysis work we need to do on the baselines to see what baseline work's been done at Goldlund already, what we've done on Goliath, where they may differ. And then that'll allow us to begin that baseline work, ultimately leading towards the permitting of Goldlund. And then that second phase, you'll get into a more significant expansion, infill drilling. Once that initial phase of work is done, that'll then lead to a more advanced feasibility on Goliath and Goldlund. We'll continue the provincial permitting. And then at this point, say next year, towards the end of next year, you'll have a feasibility out on the Goliath. You'll be looking at your project financing alternatives with a goal of sort of breaking ground in 22, which, as Dan talked about earlier, you begin with the open pit production at Goliath. Eventually, within a year or so, the cash flow from that open pit would begin funding the underground development work at Goliath. And then a few years out, once that open pit is mined out at Goliath, as you know, it's a fairly small starter pit, you'd hopefully be through that permitting at Goldlund. Then you'd be able to bring on that larger open pit and combine that with that underground production at Goliath. So that's just a sort of a quick overview of how we sort of see things developing. And of course, that'll be, there'll be announcements over the next year or so articulating that program going forward. So with that, I'll wrap things up, and we'll move to the Q&A section. So just to recap, again, we're in a great district. There's currently 3 producing gold projects in Northwestern Ontario, soon to be 4 with the Pure Gold Mine. And then, of course, a key thing about the Goliath project's always been our low capital costs and that recently completed federal EA. A lot of exploration upside, lots of infrastructure, as we talked about today, experienced workforce, positive community relationships, and then there's a lot left here for upside for both sets of shareholders. So with that, I'll turn it back to Mel to kick off the Q&A.
Thank you, Greg. As a reminder, if you have a question, please submit it using the Q&A button at the bottom of your screen. We'll start things off by turning to a couple questions live from our research analysts, followed by a general Q&A to answer questions that have been submitted by attendees. First up, we have a question from Jordy Mark from Haywood. And Jordy, your line should be unmuted. Please go ahead.
Yeah, good morning. Morning, Dan. Morning, Greg. Yeah, thanks for taking the call today. Maybe to Greg, first off, just looking at obviously a greater critical mass of resources, in play on the combined sort of entities coming into play here. Can you give us an idea of any scope and scale sort of projects you're looking at beyond maybe the 4,000 tonne per annum? Obviously, you're permitted up to 5 or so. And would you require, any significant change in, say, processing capital to accommodate that?
Yeah, so we have done a fair bit of optimization work already. So sort of up to that 5,000 ton scale. So anything beyond that, because that's beyond what we permitted for, would require, a look at the additional permitting. But that, in that first phase I talked about earlier, that's where we'll really get a good handle on where we think the right size at this point with the current drilling we've done. And of course, through additional infill drilling and expansion drilling, we do see the potential to scale this up. So that'll be a decision that'll be made over the next year. But the plan is that at this point is to stick to that 4,000 to 5,000 ton per day, which we're currently permitted for, which are quite attractive numbers, somewhere between a combined 120, 150 per annum would be some rough guidance I'd give, but obviously that's not 43-101 compliant, so I want to be careful.
Lots of work to do before we know what that number is going to be, but yeah, no, directionally, I think that's right.
Yeah, and then we have, there's some metallurgy work to done, but the scoping level work we've done on Goldlund and then the feasibility we've done on Goliath, we don't see any changes from what we permitted for. So I'm not sure if that deals with your questions or not.
Maybe I'll have an add-on there. In light of that, the potential to upscale and, as you said, sort of attract sort of talent into further talent into the region on the projects, collective projects. I mean, what would you be looking at there in terms of bringing people on board to head those operations or operations development?
Yeah. Well, I've always been pretty transparent with shareholders about that. It's about creating shareholder value. And at Treasury, before this transaction, it was about getting this EA fixed. That happened, and then getting the pre-fees out to the market. But we had a feeling that this transaction was going to happen. So that's happened now. So under either scenario, once the pre-fees was out at Goliath, or this transaction happened, obviously we were well aware that there needed to be executive appointments to help we do have a very talented technical team, but some senior experience to take the project through that development phase. And it's a great time, right? Before you get into these combined feasibilities and get into the construction permitting at Goliath, to add that talent. So that's a high priority. And I know that's a key initiative of the board, is to get that underway. And I think the scale of this project now in Ontario is going to really allow us, compared to Goliath on a standalone, is really to attract some great talent. So we're very excited about that, and I see that as a big milestone for shareholders to create value.
Yeah, and one thing I'd add to that, Greg, is just to say, in the interim, as we are starting out the initial scoping of this, our whole team, which has been, helping move forward at Goldlund, is very excited to have our sleeves rolled up and be helping, in some of this initial scoping work. So, I think you've got the opportunity and certainly the intention for a bunch of our team to continue to be involved and bring some of that real background and horsepower to the understanding of the combined. So yeah, I think that's an important component to it as well.
Mm-hmm. All right, and
thank you very much.
To take this offline and discuss some of the project details at more depth offline.
Okay, that'd be great. Thank you very much. I'll leave it with you for the next speaker or next analyst. Thank you.
Cheers, Jordy.
Thanks, Jordy. Next up, we have Richard Gray. Richard, I've unmuted your line. Make sure you unmute yourself as well. Perfect.
Okay, thanks. Congrats on the deal. And I guess just a question on maybe the regional exploration plans, because I know at Goldlund there was a lot of targets you could be going after, and is there a budget in mind for kind of chasing greenfield targets on those two big properties now that you have them both?
Yep. Well, I'll start and then you can jump in.
Yeah.
Hey, Richard. Yeah, I mean, we know there's an initial budget for the balance of this year, somewhere sort of between $3 to $5 million for exploration. Yeah, it's going to be an interesting task to try to prioritize the targets, because there's a lot of work to get done. But there's a bit of infill drilling. That's a priority at Goldlund, to start getting that ready for a pre-feasibility. At Goliath, we would definitely like to prioritize getting the C zone a bit larger, because we think that'll have a big impact on the pre-feasibility, because currently we're really just mining the underground at this point. But then longer term, you're right. I mean, if you've looked at our recent press releases, we had some very interesting soil sample work done most of the northeast portion of the project, and there's some very similar mineralogy, geology as the main zone. So that's a high priority area that would happen next year. Our team is currently defining a program for there. And then, of course, longer term, you've got the Miller deposit. So there's a lot of potential there. So my guess is that type of work would start in early part of next year, once the company is properly valued and you're able to get deeper capital at a cheaper cost as well. So my guess is this first program would be current resource area work, and early next year we'd move out along strike.
Yeah, and one of the interesting things, Richard, that you'd remember having been there a few times, there's some really interesting exploration potential sitting basically between the Goldlund main zone and Goliath, right? All down to the southwest. It's one of the big intrusions. One of the areas that Miro's always wanted to get at and drill is that big in between the two big intrusions to the southwest of the Goldlund main zone. Well, you know, that's sort of that much closer to the mill in some senses now. So yeah, I think the biggest challenge we're going to have is prioritizing the targets, but it's also taking a step back in this initial period and having a more regional geological view, having, you know, understanding what's really worked well from Treasury's perspective in kind of generative exploration, what's worked well on Goldlund, and everyone putting their heads together to find the best path. But, you know, we are drilling right now. There's drill turning today at Goldlund still. So the intention is we're going to continue, continue drilling and expect that, you know, the budgets are going to increase, not decrease from our perspective.
Great. Thanks, guys. Congrats on the deal.
Thanks, Rich.
Next up, we have Phil Kerr from PI Financial. Phil, I have unmuted your line.
Great. Yeah, just a question for Greg. This is with respect to, you know, the feasibility study for Goliath and now the addition of Goldman. Is the plan to continue moving ahead with just delivering a, you know, the feasibility study, the economics, and an eventual construction decision on Goliath? Or how does, you know, the impact of Goldland change the path forward?
Yeah, good question. So the most likely path would be a combined PEA, because we want to get capital numbers to the market and the production profile based on the, you know, because they're, you know, I saw one of your other questions. You're right. There is not. That's one of the points I made earlier. There's a significant cost savings by integrating these projects as opposed to continuing on a standalone basis. As we would have had to continue drilling at depth at Goliath and in the C zone to probably bring that mine production profile larger to attract the project financing. So we don't need to do that now. So combined with the current drilling we've done, we'd like to come out with a PEA of the combined project, sort of within about a 6-month time frame. The work at the Goliath project really will be done to a pre-feas. And then with a bit of additional infill drilling, a bit of expansion drilling, we then come out next year with a combined pre-feasibility. But that PEA will be done to the most part to a pre-fee, so that'll allow us to begin the construction permitting at Goliath. Sort of as soon as that's done, those applications will begin going in for power and water, for example. So does that answer your question, Phil?
Yeah, I think so. It's just you know, now you're trying to amalgamate, obviously, you know, a second project into Goliath, which is, you know, pretty advanced down the road, especially, you know, on the permitting front.
Mm-hmm.
So I'm just trying to get a concept here, an understanding of how, you know, what might need to be done at Goldlund to fast track or expedite that process. Potential of, you know, maybe having that initial mining activity, you know, occurring at Goldlund, you know, in the earlier years of.
Yeah, well, I mean, So the priority is the open pit at Goliath, and that'll run for say 3 to 4 years because we're going to be able to mine that at a faster rate because you've got that larger Goldlund open pit coming online, and by that point it should be through its baselines and permitting process, and then the underground would start on year 2. So then by year 3, year 4, you'd have the Goldlund open pit in production, and combining with that underground at Goliath. So that's kind of the time frame we're thinking of.
So what sort of milestones need to be completed for Goldlund to be expedited?
Yeah, so
on the permitting front?
The nice thing about Goldlund is their process will be slightly different than what Goliath. Goliath has still got significant provincial construction permitting because that's where the mill and tailings facility is going to be located. Goldlund's going to be potentially different. The first thing is this first 6 months is just understanding where we are on the baseline work, and then we can begin doing that baseline work, although we've already initiated some of the programs we know that need to get done. And then once that gap analysis type work is done on the baselines will be put in place. In certain cases, we believe it's about a year, and some of the baseline work may be a little bit longer, and then you'd begin getting that application in to the provincial government for permitting at Goldlund. So that's probably 2 years out, but it's going to be quite a different process because you're not going to be permitting for a mill or tailing facility. And that would run, it's hard to say at this point until we've done that gap analysis because, we need to know what's missing or what's not missing. But, that could run for a couple year period at Goldlund. But the timing would work out very well because Goliath would be sort of fast track through feasibility, project financing, and then you'd have construction decision within approximately 2 years. Then you'd have your year build out. So then you'd have Goldlund coming online, it's tough to say at this point, year 2, year 3, year 4, something along that time frame.
And then what's the thoughts on metallurgy and blending the 2 ores into the mill? Is there any impact on the potential sheet?
Yeah, well, we know the ore at Goldlund will process together. We know it's not quite the same recoveries as Goliath. Goliath, as you know from the feasibility work we've done with Ausenco, is approximately 97%. You're looking at the lower 90s. Slightly harder rock, so slightly higher costs. But we've done some work for through this transitional period. But we need to take that work from a scoping level work to now to a pre-feas work. So that's one of the key first year priorities, and there was some historical production at Goldlund, so we do have some very good data, both technical data and data from mining. So Dan, do you have any thoughts further on the metallurgy or that sort of time frame?
No, I think you've said most of it, Greg. The only thing I would add is, we have looked at it. There's been decent amount of scoping level work that's detailed in a bunch of our 43-101s about work that was done at Goldlund. But importantly, Goldlund's a brownfield site, right? They mined at Goldlund for 18 months in the 80s. It's a disturbed site. And so I think that goes, to number one, I think there should be some relative advantages in permitting. And number two, as Greg said, from that production, there's a lot that's known about Goldlund because, that ore went through a mill for 18 months. So it's helpful. But importantly, for all that we have ideas in our minds about how this is going to work out and what the optimal situation is, we need to actually do the work to confirm what we think. But just understand that we're starting from an amazing starting point with all of the options and opportunities that we have to develop this project in this location.
And maybe a question for Dan. Does First Mining plan to participate pro rata moving forward on exploration funding and capital development?
No, we don't. Part of this for us was about having this entity fundamentally become self-funding and separate from First Mining. So yeah, I think our plan is to be we're going to continue to be meaningful shareholders, and we're going to be contributing, contributing particularly over the transition period and scoping out some of this work, contributing a fair amount of human capital to it. But no, it's not our intention to be writing checks.
Okay, that's it for me. Thanks for hosting the call. Congratulations.
Thanks.
Thanks, Phil. Next up is Matt O'Keefe from Cantor. Matt, I have unmuted your line.
Well, hi, Greg. Hi, Dan. Looks like this deal's been a long time in coming. Just a lot of good questions been asked, but for me, I'm just curious about, you've got a good sort of generalized timeline there. What kind of budgets are we looking at, and does drilling, are we not going to be doing any drilling this year? Because it looks like there'd be a lot of drilling to be done to upgrade Goldlund to, measured and indicated from indicated. So what's the sort of short-term and longer-term budgets, and when will we see sort of some of this drilling happening?
Mm-hmm. Yeah, well, the budget for sort of that first phase is approximately about 10 million. So to get that, about 3 to 5 of that would be drilling. And you're right, there's a bit of important infill drilling we want to do at Goldlund. Getting that combined economic study out, getting that construction permitting started at Goliath, and that baseline work well advanced at Goldlund and the metallurgy work. That's sort of, that first phase, 6 to 12 month time frame. So the budget would be approximately 10 million, including, G&A. And then of course, after that, you're right, we would like to increase that drill program in 21, but we need to get the deal approved, integrated, done, hopefully properly valued, a broader institutional shareholder base. And then we would love to get into a much bigger drill program in 21, focused on expansion drilling.
Okay, great. And just on the mill, I'm curious, obviously it's great that it's been federally approved. Is it are you happy with the location when you consider the combined project? I mean, I guess you have to stick with it given the location, but is it, how long will the road have to be? Is it a big deal they're using the highway? Like maybe just a little bit on how that will work. Yeah,
good question. Well, I mean, the one advantage of the current location is the infrastructure. I mean, I can't remember if you've been to site or not, but the power line's 200 meters from the proposed pit. So you've got a lot of great infrastructure there. And we do have the ability to approximately 5,000 tons per day. Obviously, there would be a process to increase the scale of that. If ever, the resources got large enough, I guess you could look at, if you were to say to build a 20,000 ton per day mill, at that point you may look at moving that location to Goldlund if that was where the resource expansion occurred over Goliath. But right now we're set on that 5,000 ton per day range, and then looking at expanding that as needed. And the road, so the projects are about 2 kilometers apart. The deposits are about 25 kilometers apart, and then by road you're looking around 30, I think it's 33, 34 kilometer distance, all paved highways. There is one opportunity to build a small road across Goliath that would reduce that travel time. So we haven't quite looked at the opportunities yet in terms of transporting. At this point, we've only looked at trucking.
Right. Okay, I guess I'll leave it there, but sounds like a lot of work ahead for you guys, but pretty exciting times as well. Thanks.
Okay. Thanks, Matt.
Next up, we have Jake Sikelski from Roth Capital. Your line's unmuted.
Yeah, hey, Dan and Greg, thanks for taking my questions.
Hey, Jake.
Just building a bit off of Matt's question, and just conceptually thinking about the hub and spoke model here. I mean, obviously right now the base case is to use the infrastructure in place, but just thinking longer term, what are the other options as far as getting Goldlund material to the central processing facility at Goliath?
Oh, Jake, we've thought at a very high level at it, but none of them done much beyond, sketching it on a pad. So there's a series of forest roads that would have you be able to get the material, closer down kind of to the bottom of the Goldlund property. You know, so there are sort of off-road ideas. There's, you know, there's all kinds of material conveyance opportunities that you could do. But this, listen, I think this is one of the first real studies that that gets kicked off when we start into the integration here, right? And I think you can start with a base case that is, this is what it's going to cost to, you know, per ton to truck 30 kilometers. That's not going to be a surprising number to anyone, I don't think. You know, it gives you a pretty nice foundation of understanding of, you know, ultimately what the cost is. But in some of the early scoping that's been done, you know, if you're 15 cents a ton kilometer wouldn't be an out of the ordinary kind of number. It gives you a sense of, you know, what a cost per ton would be on Goldlund ore moving down. And, you know, if you're mining almost 2 grams at Goldlund, I think you can afford it, right? That's the important thing, is that, you know, the high grade open pit nature of Goldlund does lend itself, particularly as you kind of get up and running with all of the investment, the infrastructure, and the advantages that you have with Treasury's sort of advanced permitting stage. It really does give you the flexibility to have a really decent base case you can optimize on afterwards. But again, a lot of that work's still ongoing. Still a lot of work to be done in the next 6 months, but it's pretty exciting when you're starting with this toolkit.
Of course, fair enough. Looking forward to seeing it all come together here over the next year. Congrats again.
Thanks, Jay.
We now have a question from Heiko Ile, analyst at H.C. Wainwright, that I will read out. Congrats on getting the transaction done. Can you provide any additional detail on the shortened timeline to production given existing federal environmental assessment approval to build a mine, mill, and tailings facility at Goliath that is listed in the note? And then is the longer term plan to hold on to the 19.9% stake in Treasury, or do you plan to ultimately distribute the rest as well?
Okay, well, I can start with that.
Yeah, why don't you take part one, I'll take part two, Greg.
Okay, sure. Yeah, so I mean, for a Goliath project to continue through the balance of its permitting, there is no shortened timeline there. We still need to get through a fairly onerous construction permitting, things like power, water, closure permit. So that, as mentioned, will be kicked off towards the end of this year. And but there is, and you know, we don't want to get ahead of ourselves here. You know, we do have to deal with the regulators on getting Goldlund into the mine schedule down the road. But we do believe that once the baselines data is understood, there will be an expedited process for them, just solely based on the fact that they don't have to potentially permit for a mill or tailings facility. So that's sort of there is no shorter timeline for Goliath moving ahead, but there should be for Goldlund.
Yeah, and then on the second part of that, you know, we absolutely intend to hold the 60 million shares that we don't distribute. In large part, it's because we believe that there's a lot of value to be surfaced here, right? We talked about the valuation earlier. You know, this is, I think, one of the most exciting development opportunities, and I think we absolutely intend to hold through the point of being able to see that value surface. You know, longer term down the track, you know, outside of the scope of the time of the distribution that we're talking about, you know, we'll see as things evolve, but certainly, you know, as we move this forward, yeah, our absolute intention is to hold these shares.
We now have a question from Olivier Crotaz. The two properties are 2 kilometers apart. Are there any plans to join them by buying claims to link Goldlund to Goliath?
Hi, Olivier. Good afternoon. Yeah, there actually are plans, and that's actually already occurred. We have staked what was available between the projects. Just obviously, there's some infrastructure benefits by doing that, so that has occurred over the last few days.
Next up, we have a question from Chris Lehman for Dan Wilton. Can you provide more of an explanation about the distribution of Treasury Metals shares and warrants to First Mining shareholders?
Sure. I mean, in terms of the process, Chris, we're fundamentally, it's a bit like a SpinCo transaction in the end. We believe still have some work to do on this, but we think it gets done essentially as a plan of arrangement where we'll go through a process and a shareholder vote to approve it. And then after that, you would receive, share of new company, which would be basically First Mining X the Treasury Metal shares, and you'll receive Treasury Metal shares and warrants. So we anticipate that leading up to that, we've had a few shareholders ask about, the time frame. When do I need to hold the shares to make sure that I receive my distribution? There will be a record date like you would have on any kind of amalgamation or plan of arrangement transaction, which will be up and around the time of the shareholder meeting, or prescribed number of days before the shareholder meeting. Up until that point, will be holders as of a record date will be the ones who will receive the distribution. So, and we anticipate that's later than 6 months, and part of that's driven by U.S. securities regulations, and part of it's driven by our desire to help move the project forward from here to the point where we kind of have at least this initial PEA level scoped out.
We have a question for Greg from an anonymous attendee. With regards to the share rollback, do we expect it to happen on close or in the future? And is a large U.S. exchange listing in the future of the company?
Good question. I'd say yes to both. I mean, the 3-to-1 rollback will be approved by shareholders in the circular that's going out in the next 30 days. And so early August, there would be a rollback occurring in conjunction with the closing of the transaction. And I think that's important because I think it's the right number for a rollback. A perfect about 100 million shares issued, not counting any additional dilution. And then yes, longer term, I think when you have the combined economic study, we both currently trade on the QX, but I do think longer term it makes a lot of sense to get a proper U.S. listing. But of course, that requires a fair bit of planning and legal work. But I would be fully supportive of that. And as mentioned, First Mining's got a large shareholder base. We've got some key institutional shareholders in the U.S. like Extract, and I think there's a real potential to attract other larger institutional investors that currently aren't on the register. So it makes a lot of sense in my opinion, especially for a project located in North America as well, and in today's gold environment.
So following a bit on that question, actually, Paul Gerard Lemke has asked, who are the institutional shareholders currently?
I can comment for Treasury. We've got quite a large European shareholder base, family offices, about half our register there, and then in North America, Extract is one of our largest shareholders, and then there's a pretty nice mix of Canadian institutions from various flow-through financings and smaller institutions as well. And then Insiders own approximately of the combined company. I think it's going to be about 5% from Treasury. And Dan, anything to add?
Yeah, I mean, our shareholder base is, as we've talked about, it is divided, not quite half in the U.S. And then significant European shareholding proportion. And the balance in Canada. In terms of institutional shareholder base, we've had great support from Gold 2000 over the years, who's been a real supporter of the team. And we also did an institutional flow-through raise last year, so have some of the Canadian flow-through institutions who would be shareholders as well. But that's something that on the First Mining side, we're also continuing to look to build our institutional shareholder base.
So given the time, I'm just going to ask Dan and Greg to each provide a short closing remark before we end this call.
Yeah,
Over to Dan.
Sure, I'll go first and let Greg wrap up. I mean, I hope it's come across from the discussion today how excited we are about finally doing one of these deals that makes a lot of sense in the mining industry. So we're very excited to continue on as shareholders of Treasury, and I think that this combined Goldlund Goliath project is. As I said kind of at the outset, this is the greatest 3 million ounce project in the gold sector that no one's ever really heard of. So I think we have an enormous amount of upside from here on seeing the value come to this project. Lots of hard work to get from here to the starting line on it. But no, I think this is something that we're very, very excited to have as kind of a cornerstone of First Mining.
Yeah, and for me, that's pretty easy. There's been a lot of hard work that's gone into this by Treasury's board, our advisors, our technical team, employees, and shareholders over the years. So we thank them for their support, and as well on First Mining side, I know there's a lot of hard work to getting this deal done. So we're very happy to be at this stage, and look forward to continuing to work with them and get out and start marketing the combined company. Will be a lot of fun. So thanks, everyone.
Thank you, Greg and Dan. Any additional questions that we weren't able to answer within the hour can be sent directly to management. That's all the time we have. Thank you, everyone, for joining us today.
Okay, thank you.